Good morning, everyone, and welcome to our webinar. This is Courtney, the Marketing Coordinator here at AIM. Today's webinar will be recorded and later posted on our website. This does mean that all attendees are automatically muted so that we can get a quality recording. If you have any questions, feel free to type them into the chat box. We'll try to answer them throughout the presentation, but if we're unable to get to all of them, we'll have a member of our marketing team reach out to you individually to make sure that you get those questions answered. Our newest agent resource, the 2-Minute Minute, is now in full swing. Our marketing team is bringing you quick hit ways to talk to more prospects, write more business, and grow your agency. We're posting new videos every Monday and Wednesday, so check out our social media pages, our Facebook page, LinkedIn, YouTube, and Instagram pages, and see what you might have missed. Our next upcoming webinar is June 14th at 9 a.m. Pacific, and it will again be presented by Mike Anderson and Nationwide's marketing team, talking about their LTC Writer products. So with that, I will go ahead and pass it over to Mike so that we can get started. Thank you, everyone.
Thanks, Courtney. Appreciate it. As always, Courtney does a great job of pulling all this stuff together. For those of you that don't know me, this is Mike Anderson. I'm the Senior Internal Wholesaler here at American Independent Marketing. We are thrilled to be joined by the Fab Five from Nationwide this morning, who will be taking you through this tutorial on their long-term care products. We got Christian Rivera Lopez, Jeff Sobota, Luke Ashmore, Tony Massenelli, and Kyle Chantos are all with us here today. We really appreciate you gentlemen making your time available because we know that you're in high demand, and we wanted to make sure our agents got a proper introduction to this because they've been clamoring for this thing for a while. So I think you're going to lead off, if I'm not mistaken, Kyle. Is that correct? Or are we going to go with Luke?
Christian's going to go ahead and start on our CareMatters 2 solution. Yep, and then it'll transition to me. Thanks, Mike.
Okay, sounds good. All right, well, we're going to turn it over to Christian. He will take us through the first steps of this. So, Christian, take it away.
Yeah, absolutely. No, appreciate it. Mike, thank you so much. And hey, everyone, really excited to be here, right? We're excited with this partnership that we're doing with AIM. So I know it's going to be a great opportunity for all of us, right? And I'm really looking forward to working with a great LTC shop, right? So I'm one of your regional wholesalers, and we're going to share a map later on, but the regional wholesaler that covers the western half of the country, right? And Kyle will cover the eastern half, at least with our CareMatters product, which I'll be talking about today. But a little bit about me: born and raised in Puerto Rico. 2014, got a job opportunity to move to Ohio. Started working with Nationwide then, and that's when I kick-started my career. Worked on the life insurance side, worked on the annuity side, and then in 2017, my wife was like, "Dude, it's too cold. We need to find a job out in California." So I left Nationwide for a few years, went to work with another LTC carrier, and came back to Nationwide in 2022 as the CareMatters wholesaler for the western half of the country. So really excited to be here. We're going to be talking about a few things, right? I'm going to start us off with CareMatters 2. Now, before I go into the presentation, let me give you guys some news updates. We're actually doing a price improvement on our CareMatters 2 product, and this is going to go into effect on June 12th. Let me go ahead and share this guide here. So again, going into effect on June 12th, we're making our product more affordable for our clients, so more leverage for their money. Now, it's going to go into effect on June 12th for all of these states, except Arizona, California, Connecticut, Washington, D.C., Delaware, Florida, Indiana, North Dakota, New Jersey, South Carolina, and South Dakota. So it's basically the compact states that it's going to go into effect on June 12th. For the other states, we already applied for the price improvement. We're just waiting for those states' approvals to come into. Now, in the state of New York, this will not apply. And I'll talk, as I'm going through the presentation, I'll talk a little bit about the differences between CareMatters California, CareMatters New York, and our regular CareMatters 2 in every other state, right? But price improvement will not apply in New York, But New York is getting some sort of improvement as well. So in New York, we have a discount with our product where we if the client is single life, if they're not married or in a domestic partnership or civil union, they have a single pricing. For couples, which if they're married, domestic partner, or in a civil union, they get a discount. Well, moving forward in New York, everyone is going to get that discount, even if you're single or married, civil union, etc. Right? So in a way, there is also going to be a price improvement in New York. And another big thing, CareMatters too, and this is going to apply in every state except New York. Monthly benefit will go from $2,500 as a minimum. It's going down to $1,500. So now if your client, it's out of their budget to meet at least that old minimum of $2,500, we're now lowering that, and that's going into effect on June 12th. So some really good improvements there. Now, this is just one part of the news. I'll let Kyle and Luke talk later on about some of the other updates that were coming out in June 12th, right? Some really good stuff, some really exciting stuff. And again, we're just excited to be partnering with you guys, right? I know it's going to be a huge opportunity, and I really look forward to what we're going to be having available going forward. So, like I mentioned, today I'm going to be talking about CareMatters 2. It's our long-term care hybrid solution here at Nationwide. I'll go through the disclosures real quick. I know, Mike, I know you like to read these, but I'll just fly through these, man, so we can just be conscious of our time today, right? All right. So first of all, let's take a closer look at what CareMatters 2 is and what really sets it apart. So really what sets it apart is from other LTC policies is the familiarity. Right? Nationwide CareMatters 2 policy is designed to provide funds that will help client pay to receive LTC where and from whom they're most comfortable. Second thing is the choice, right? Sorry about that. The product is not a one-size-fits-all product. It's filled with customizable features to help meet your different clients' financial needs. And then the flexibility, which is the most important part of our product lineup. Right? Our CareMatters 2 product includes a feature that allows policy owners to use their monthly benefit as they see fit, as well as any payment and inflation options that you can tailor to those clients' individual needs and circumstances. And I'll dive into a little bit more into each of these, right? So familiarity, right? Receiving care where they're most comfortable, from choosing who provides care to how those expenses are paid for. With CareMatters 2, it's designed to help those clients receive long-term care in the comfort of their own home or wherever they feel they'll receive the best care. They have that option. They can choose if they're going to stay at home or if they're going to go into a facility and receive that care, and whoever wants to provide that care for them, right? Another big thing is the premiums and benefits they'll always recognize. Unlike many traditional long-term care policies, premiums for this product are guaranteed, right? They will never increase, and benefits are guaranteed to never decrease. And then the last one, you have a guaranteed death benefit. So with our CareMatters 2 product, you already have a death benefit that comes with the product, right? It's basically, the way that it works, it's basically a return of premium for the client if they never use this policy. But even if all the LTC benefits are paid, your client's heir will still receive a 20% residual death benefit from the original policy specified amount, right? And assuming, of course, that the client hasn't depleted any, done any additional withdrawals, right? Cash value withdrawals or taking any loans out of the policy, everything is always going to be guaranteed. We talked about the multiple ways, right, that we can design this product to fit your client's financial needs. So we have 5 different premium payment options. We have 4 different inflation protection options, 3 different refund of premium options, and a flexible 1035 exchange and or lump sum payments. I'll dive in a few slides into what each of these are, and I'll also explain what's the difference between California and New York, right, when it comes to these different features that are available. And then the flexibility, right? With this policy, our product, it's a cash indemnity model. So there's no need to submit monthly bills or receipts once that claim is approved. Policy owners can elect to receive 100% of their available monthly cash benefit, and the monthly cash benefit can be used without any restrictions from Nationwide, right? And another big thing, policy owners are provided with a separate identifiable LTC and life insurance premium. And I'll talk about that. What does that mean for your clients, especially for your clients that are business owners? Now, as you see, right, I talked about the three different things that really set CareMatters 2 apart. One thing that I've always told my advisors, especially with CareMatters 2, when it comes to long-term care, using our CareMatters 2 product, we're protecting our clients on 3 different levels. We're protecting the client's quality of life, that if the client goes on claim, again, they can choose who's going to provide that care and where they're going to receive that care. You're protecting the client's family's quality of life, because we have a cash indemnity model. Even if the family members are the ones providing that care, you can actually use this policy to pay them, right? So we're protecting their quality of life. They don't have to go in debt just because they're taking care of their loved ones. And then the third one, most important, we're really protecting the rest of the client's portfolio, right? Client goes on claim, and here I'm sure everyone understands this. Client goes on claim, this is less money that I have to take out of the portfolio to pay for those medical expenses, right? So now let's see it in action. Let's see how the product works. Now I'm going to show you a scenario with a single pay. Remember, guys, right? There's 5 different ways on how we can fund this. I'll talk about those in a few slides. But let me just show you a single pay just to show you real quick how this product works. So we have a hybrid long-term care policy here, right? In this example, we're repositioning $100,000 to pay for a Nationwide CareMatters 2 policy. Now, right off the bat, that's going to buy this client a total pool of $545,916. Now, this illustration, this hypothetical that we're looking at here, is for a 55-year-old woman with non-tobacco rating and couples discount. In addition, the return of premium option that they chose was the minimum refund of premium with maximum LTC option. I'll talk about that in a few slides. What does that mean, right? But you can see the amount of leverage that we're getting here, right? This is $400,000 less that the client needs to take out of their portfolio to pay for those LTC expenses. So we're doing a single pay of $100,000. In this example, we're showing you a 6-year benefit duration. Now, our product can go anywhere from a 2-year all the way up to a 7-year, right? But our 6-year is where we're most competitively priced, at least with our actuarial pricing and everything, right? What is that $545,000 comprised of? Well, the green bucket that we have on the left side, right? That's basically going to be our face amount or death benefit. So client puts in $100,000. As you can see, I have a guaranteed return of premium with the death benefit, because if I never use this policy, my death benefit is going to be $181,972. But if I do go on claim, I deplete that first bucket first, right? That green bucket. And then I go into my light blue bucket, which is my additional $363,944. This is only going to be long-term care benefits. The addition of those two, that's going to be your $545,000. The way that this policy is paying out is $7,582 a month, right? So that times 6 years, that's going to be your $545,000. Let's say I did go on claim, right? And I depleted my full $545,000. A couple of years later, I pass away. What goes to my beneficiaries? Well, here's that 20% residual death benefit that's still going to go to my beneficiaries, right? $36,394, which is going to be 20% of that original face amount on the policy. So you can see the amount of leverage we're really giving these clients here. what's even better, guys, especially for everyone on this call, these numbers are right now. Next week, these numbers are going to get even better, right? We're going to do that price improvement. So that means for the same $100,000, this 55-year-old woman is going to be getting way more benefits, right? And here we're looking at without inflation, which I'll talk about that, and even the different features that we can add upon this product. So let's go into those. Let's go into those key features and what we have available. Like I mentioned, right, we have 5 different payment options. We have the 1035 exchange flexibility, meaning that the client can use any old life insurance policies, do a 1035 exchange for that cash value, and lower that annual or monthly premium, right, depending on the option that they have, or they can use a cash deposit lump sum payment, right? We have 4 different inflation options. Now, the 4 inflation options are for every state except California and in New York. We have 3 different refund of premium options, a retroactive payment on the elimination period. And I'll talk about that as we're getting close to the end, because that's going to be a huge benefit when it comes to using our CareMatters 2 product, right? And then the last one, like I mentioned, the separate identifiable premium. Let me go into that section real quick before we move forward. Separate identifiable premium. As you know, right, LTC premiums are either tax deductible, right? For individuals, it's as we all know, it's a little bit more trickier because the client needs to have over 7.5% of their adjusted gross income on medical expenses before they can deduct any LTC premium. But really, that conversation is driven more for business owners. Depending on the business, on the type of business, if it's a C Corp, S Corp, LLC, or limited partnership, there's a good amount of tax deductibility, right? And how we can design this product for the business to really take advantage of that tax deductibility. So what our product does, we identify what's the life insurance premium and what's the LTC premium. By doing that, you can have that LTC premium tax deductible. Now for individuals, you know, I mentioned, right, all the restrictions that it has for individuals. Well, for individuals, the conversation changes because now you can use a health savings account, an HSA, to pay for that portion of the premium, right? So especially those clients that may have old HSA accounts from previous jobs, that's a huge opportunity because we can even use that tax-free money to pay for the LTC portion of the premium without having a taxable event. And that's something that we can really, if you guys want to go more in depth, Kyle, Luke, and I, right, we're available to do an additional presentation to really go in depth on how we can talk with our different business owners, depending on the business, how we can take advantage of that, what's going to be the tax deductibility, etc. Right? So huge opportunity there. And that's one thing that I love about CareMatters too, right? It really extends that conversation to even those business owners. Another great feature, right? It's a great conversation for your middle market. So for example, with this product, we have multiple ways that we can fund it. So we saw the single pay scenario previously in the hypothetical that we had, but you can also fund this in a 5-pay, 10-pay. Your clients, depending on their age, they can do a pay to age 65 or a pay to age 100. And all of the 5-pay, 10-pay, pay to 65, and pay to 100, you can even pay those on a monthly basis. Now, what's great about this product, if they choose to pay it on a monthly basis, there's no additional fees for that. So we take that annual pay divided by 12, that's going to be your monthly pay, right? So really flexible there. For the pay to age 65, the max age to buy that option is 55 years old, and for the pay to age 100 is 65 years old. I don't expect you guys to memorize all of this, especially from a presentation where we're talking pretty quickly, right? Any questions, let us know. We'll help you run those illustrations, right? Contact Mike. Mike is working closely with us. We're here to help you guys out, absolutely. We talked about the 1035 exchange flexibility options, right? You can use old money or new money, even cash, to add a lump sum to lower those annual or monthly premiums as we're doing it. We have 4 different inflation protection options. Now, in the state of California, we do not have that last one, the US medical care inflation option. And in the state of New York, we only have a 3% simple and a 5% compounding interest option, right? But the LTC options for every other state, 3% simple, 3% compounding, a 5% compounding option, and then we have a unique option. Now, we don't sell this a lot, right? It's for those younger clients that are really looking to have additional options, right, when it comes to their product. But we have a US medical care inflation option. Now, it's the first of its kind, right? Basically what it does, it's referencing the index. It's a medical care component of the consumer price index for all urban consumers, right? So it's basically helping keep pace with the medical care related inflation. So as the medical care costs keep going up, so will this index, right? Now it's going to range anywhere from 0% all the way up to 6%. Or you can choose a fixed option of a 2% roll-up benefit option, right? But again, the way that this product works, it's this rider works, it's basically an index. So a big reason of why it's not a big sale, right? Of why it's not a huge part of our numbers is because why is this client buying this product? They're buying it for the fixed component of it, right? They're buying it for the guarantees. I'm putting my money in there. I know what I'm getting. I don't want to think about this anymore, right? That's why usually they do not go with this inflation option. And especially that the pricing on this option is the same as the 3% compounding option. So when it comes to us running our illustrations, we're mainly seeing clients buying that 3% compounding inflation option. We also have return of premium options, right? We have 3 of them. We have a vested option, a one-time step-up option, and then the last one, which is our minimum refund of premium with maximum LTC benefit option. Basically, the first 2 are guaranteeing that your client is going to have a higher cash value with a lower LTC benefit in those early years, right? So higher cash value in early years, but lower LTC benefit. The last one is basically telling you that your return of premium is your cash surrender value. So there's really no return of premium mainly, but you're getting the maximum LTC benefit option. Now that last one is the one that's available with the Pay to Age 100. So you can imagine that's our most popular option there, right? Now, mind you, client is already getting a guaranteed return of premium with the death benefit. So that's another reason why clients are going with that last option. Because might as well max it out for LTC. I already know I'm getting a guaranteed return of premium with my death benefit if I never use this policy. And if I do, I still have that 20% residual death benefit on a guaranteed basis. But I'll dive into these, and I'm closing it off here soon. So vested option, right? It basically, depending on the payment option that they chose, it will grade anywhere from 85% to 100% in any given year, right? Depending again on the payment option that they choose, and it's not available with the Pay to Age 100. One-time step up, what it does is you're going to have a guaranteed return of premium after 10 years. In the first 10 years, it's 80%. Year 11, it's going up to 100%. And then we talked about that minimum refund of premium with maximum LTC. They're basically getting their cash surrender value, right? And that cash surrender value will equal the face amount on the policy at maturity date of the policy. Let me talk about one last feature before I hand it off to my colleagues. The retroactive benefit R&O elimination period. So as you know, there's 2 types of elimination periods out there in the industry. You have service day elimination periods and you have calendar days elimination periods. With us, we wanted to keep it as simple as possible for a client So we went with a calendar day elimination period, and it's 90 days. So 90 calendar day elimination period. But let's say your client is receiving a monthly benefit of $10,000 a month. Well, on day 91, the check we're going to send the client is going to be a check for $40,000, right? So we're going to look back at those 3 months that they didn't get any benefits, pay them for those 3 months plus the 4th month. So how powerful is that, right? That your client doesn't have to wait until the end to get all the benefits from their policy. We're actually giving them that upfront. Even though the client does have to wait those 90 days, they're going to get the full retroactive benefit on day 91. And as you know, elimination period only needs to be met once per the lifetime of the policy. And that's basically the first time they go on claim. So I'll leave it there. That's our CareMatters 2 products. Now, again, any questions, please let us know. We're going to share our contact information towards the end. But I'll pass it off in the sake of time. I think Luke or Kyle, who's going next? I think it's Kyle.
Yep, I'm next.
Awesome. Thank you.
Thank you, Christian. Appreciate it. Well, guys, we're excited to be with you again today and really meet with you from the partnership aspect. And Christian's done a really great job of showing you what CareMatters 2 is. So today we're going to take it a step further and say that there is going to be a new product that is launching on Monday, June 12th, that you guys will have available for sale right away. And so we're going to talk about that one in one quick second, but I always just like to summarize and reiterate everything Christian said is going to pretty much be the same thing that I'm going to talk about today with this new product. But I want to emphasize once again the partnership that we have. Christian covers the western part of the country. I cover the eastern part of the country. Luke, our internal, covers both of us internally in Columbus, Ohio. We are here to help you. You also are going to have life wholesalers as well. So this relationship right off the bat is built to flourish, and we're here to help you get it off the ground and get it up and running. And we're very, very excited about it, and we're going to be accessible to you at all times. So just wanted to say that there again, but really excited about it. The advantages, right, of a linked benefit, and Christian did a great job of laying it out, but just to summarize really quickly before we go into the new version of the product is the guaranteed benefits that we talk about on a daily basis with CareMatters, right? Being able to sit in front of your client every single day, put an illustration in front of them and show them the line, all values and benefits are fully guaranteed, right? That cannot be more profound, in my opinion, to be able to say, Mr. and Mrs. Client, when you buy this type of a solution today, you know exactly what your benefits are going to be 30 or 40 years from now, right? You know exactly that your LTC benefits are what they're going to be, and Nationwide cannot come back and ask for more premium. Every feature becomes locked in right away. And what's also great about it is we have a death benefit built in as well. So regardless of if the client uses no LTC, it's not a standalone solution, we're going to pay that death benefit to the proceeds of the beneficiary. And oftentimes it's going to be at least their money back, if not more. And we also have a residual death benefit as well that will pay out even if they exhaust all LTC benefits. But my favorite line, right? Immediate guaranteed leverage, creating long-term care on day one, right? You're getting immediate leverage right away on the long-term care front. And I think that is so crucial as we approach folks coming out of COVID. We've never had a better time to talk about long-term care in the industry. And you guys are at the forefront being able to partner with us today. So without further ado, we'll get started. And now I get to share the exciting news of the new product that is launching on June 12th for you guys in the firm. It is called CareMatters Together. So everything that Christian had just mentioned about CareMatters 2, that is an individual products, we now have the ability to say, hey, there's also a joint product that Nationwide has, and it's called CareMatters Together. And there's not many times in the insurance industry where you can say you're the first at anything, right? And so Nationwide can finally claim that, and we're at the innovation of the LTC industry. We are the first cash indemnity joint life linked benefit solution. So we will be the first of our kind, a cost-effective way to insure two lives. So now you have two people, one policy, one carrier, with Nationwide, with cash indemnity, a perfect storm, right? So it's going to be more simple for you guys to understand. It's going to be more predictable, right? Once again, every feature is guaranteed, so they'll know exactly what their premium is, they'll know exactly what their benefits are, they'll know exactly what their death benefit is, what their cash value is, because it won't be able to change. So they'll have control of it, the full amount. And then ultimately the cash indemnity feature, putting the clients in control to say, hey, there are no restrictions on the benefits that we receive because it's cash indemnity. Now we can also decide who takes what benefit because we're on the same policy. So we have built this from the ground up. You know, Tony, our manager's on here. He's been working on this for, it seems like 3 years. It's a great solution. We're very, very excited about it to partner with you and bring it to you. And we're going to go over a little bit of where this may fit and kind of the nuts and bolts of this. Once again, a lot of the same parameters of what Christian said on CareMatters 2, the individual version, but now we kind of simplified this in a way to offer to husband and wives, right? Domestic partners, business partners, brothers, sisters, right? Sibling relationships. And one thing I'll point out right away is this is going to be a shared benefit pool. So everything that Christian had mentioned was the benefit pool is tied to one individual, and they would receive, in that case, the example he showed, 6 years of benefit payouts, right? Well, now we've kind of pared that down, and we're going to say that the clients ultimately have benefit LTC monthly benefit payments that they can receive, and they can receive those in the form of 48 payments, 72 payments, or 96 payments, right? So if you're good at math, that's 4, 6, and 8 years. But we want to be very, very clear that not both clients have 4 years of benefit or 6 years of benefit or 8 years of benefit. That's the total amount, and then the clients have the opportunity to process how they want that to be distributed to them. So that shared pool allows you guys to be able to go in and meet with the clients and say, maybe there was an opportunity where they were strapped for cash or funds and they couldn't insure both clients, and then they had to make a decision on, well, who do we insure? And it's most likely the woman in that case, right? But now you're eliminating that feature. You're able to put 2 people on one policy, and then they don't have to worry about purchasing it separately. They still can if they would like, right? If they still feel comfortable buying their own individual policies, they absolutely can do that. But we're just trying to get more people into the LTC space. This shared benefit pool eliminates the need to decide, how do we put this on 2 different people, right? And they can make it affordable however they would like, and they can ultimately decide how they use it. So we're going to run through some quick examples that you'll probably have off the top of your head about how does this work, right? So in this case, we have a husband and wife. We have Monroe on here. He's going to go on claim first. He's going to be on claim for 2 years, and then he's going to pass away in this example, right? And then we have a 2-year gap, and then the LTC picks up for the spouse in this case, and she takes the remaining 72 monthly benefit payouts for the total of 96. So as you can see, in this case, it doesn't have to be at the same time. Monroe goes first, passes away. There's a lag period of LTC benefits being paid out, and then we have Dolores kind of cleaning up the rest of those monthly benefit LTC payouts for the total of 96 payouts. In this case, this is, 8 years, as you would say, but we call them 96 monthly LTC benefit payouts, which is going to be the longest time period that Nationwide's going to offer this type of a solution. So here's a second example, and one you'll probably get questions about as well. Hey, can I take claim at the same time? Well, in this example, we have Stephen and Michael here where they have some overlapping claims. So you have that opportunity as well to say, hey, somebody goes on claim first, but back to Monroe where he had passed away and then his spouse uses it, now they can use it at the same time. So Nationwide can distribute payments to both individuals off the same policy at the same time, and then Michael and Stephen can use those benefits however they would like. So ultimately, right, if their policy in this case is paying out $5,000 a month, Stephen and Michael are pocketing $10,000 a month to be used towards their LTC. And because it's cash indemnity, they can do it in the comfort of their own home, surrounded by their loved ones, and even take care of each other or have loved ones administer the care, what's called informal caregiving. So that's another example. And then the final example that you may get questions on is, hey, well, what happens if somebody uses all of the benefit, right? And that may come into play here. We don't know what the claims process is going to look like for every client, but that is an opportunity for you to say, hey, yes, that may happen, right? So that's what you see on the screen here. John uses all of the benefit, and unfortunately, there's nothing left for Lori. Now, if they're pocketing that LTC benefit, maybe John had tucked away a little bit of that money and he's preserved it for Lori on the back end as well. But this is just something that may play out. So you'll probably get that question from now and then. Hey, what if somebody uses it all? that may happen. That just simply means that Lori doesn't have any LTC on this contract, but then whenever she passes away, the death benefit will be paid out to their beneficiary. So we still will have a death benefit on this. It will function like a survivorship solution. So we'll pay out upon the second's passing. And all we tried to do is try to make it more predictable and add more clarity as much as we can, right? So we still have the guaranteed premiums that Christian mentioned. We still have guaranteed long-term care, guaranteed death benefit, guaranteed LTC benefits, right? So being able to sit in front of your client and put this in front of them once again and just tell them, hey, for the next 60 years, everything you see here is guaranteed. Nationwide cannot come back and ask for more money. Nationwide cannot change your benefit, right? Being able to put that in front of them goes a long way, and especially when you're partnering with a Fortune 100 company like Nationwide as well. It's just a great solution all the way around, and that's what we're here for. I think Christian did a good job of explaining this, but this is a nice visual here, right, of the cash indemnity situation versus reimbursement. Nationwide lies on the left side there. No bills and receipts to be submitted, right? Once your client goes on claim, we start paying out those LTC benefits every single month. So the tax-free benefit can be used however they would like without restrictions, versus on the other side, which is not Nationwide, the reimbursement plans out there where somebody has to keep track of the invoices and the bills and the receipts, and then they have to submit them to the insurance carrier. Then the insurance carrier decides, hey, do we like this? Do we view this as a service that qualifies, that we'll reimburse for? And ultimately, they're the final decision maker. So they could say, no, we don't feel comfortable with this as a qualified service, and we can't reimburse back to you. So keep that in mind there. We're trying to make it as easy as possible, right? Most folks don't want to be in the claims process. That's something Christian, Luke, and I hear all the time. Hey, I don't want to be in the claims process. I don't want to handle bills and receipts. Well, you can eliminate all of that with the cash indemnity story with Nationwide here on the forefront for CareMatters Together. So here's the product features. So Christian did a really good job of laying out the individual version, right? The age market for CareMatters 2 is 30 to 75, right? We can issue policies from 30 to 75. With CareMatters Together, we're going to cap it at 70, but we still have a minimum of age 30. So you're looking at 30 to 70 years old, and you have a really good target demographic here. Now, hopefully you guys have clients out there that are 30 years old thinking about long-term care, right? Realistically, probably not too many. I would say our target demographic is 45 to 70, right? Those are folks that are looking for long-term care. They're healthy. They're looking to generate as much long-term care as possible, and it's going to be more affordable buying it younger. So just keep that in mind there. For CareMatters, our average issue age is 56. So that age is creeping down. A lot of times people associate long-term care, right? Well, I'll buy it when I'm 60, when I'm 70. People are starting to buy it in their 50s, and it's really benefiting them in the long run. Now, especially we're pairing it together with that price improvement on Monday, you'll have a great opportunity to talk long-term care right away with Nationwide. What we did also is we did swap out one of our payment structures. So you can do a single premium, pay for 5 years, pay for 10 years. For CareMatters Together, this joint solution we're talking about right now, we did introduce a 20 pay that's available. So we removed the pay to 65 on CareMatters 2 like you had there. And now we have a 20 pay on CareMatters Together versus the pay to 65. And then we still have the pay to 100 as well. And so one thing to point out here at the bottom is there is going to be a 25-year age difference that's permitted between the insureds. So if you're working with business partners or husband and wife, if they're greater than 25 years, we're not going to be able to issue that type of a policy. And we'll get into what that second part means in a second. So just keep that in mind there, that if you're working with folks, we got to be within 25 years of age. What we also introduced here, which is a little bit unique, and on the underwriting side for CareMatters 2, right now, you do the application, you do the interview, and then it's either approved or declined. So no blood or urine. If we need more information, we order the medical records, but there's no rate classes with CareMatters 2. It's approve or decline. And now we're going to keep that same structure. You do the application, you do the interview, there's no blood or urine, but now we've introduced 2 rate classes, preferred and standard, and all we did, the reasoning for doing that, is to accept more risk as a company. So those standard rate class just extend our table ratings down a little bit further so we can accept some more marginalized risk for folks, right? That maybe we wouldn't have captured before, but now we feel comfortable with that joint solution. So keep that in mind. When the software will update for this on Friday, June 9th, you'll be able to run these. Most folks you're going to quote are going to be at preferred. Standard are going to be those really, really low table ratings. Think of table H almost in that aspect. What I also wanted to point out is because those are more marginalized, rate classes on the standard rating, we cannot issue the joint policy with 2 standards together. So if you have that solution out there, you cannot issue them with 2 standards. We can only issue at preferred or preferred standard. Our underwriters are going to do as much as they can to try to get one person to preferred. But if ultimately 2 people come back at standard, we'll have to reposition this as maybe an individualized CareMatters or look at another solution there. And once again, this is all new to you guys. You're going to have questions. Work through us, work through Mike, work through Courtney. We're here to help you. So one thing I wanted to reiterate as well is a new feature for CareMatters 2 starting Monday is we've lowered the minimum LTC benefit. So it was at $2,500 per month. We've now dropped that for both the individual version of the product, CareMatters 2, and now CareMatters Together to $1,500 a month. So why did we do that, right? We are just trying to get as many people covered with long-term care that we possibly can, and we are trying to arm you guys as agents to do so. So now if you're in competition for maybe a standalone space or another agent out there that's showing that, we should be able to compete with them really, really well and be able to say, hey, this cash indemnity feature is going to compete. We're right in the ballpark, but look at all these other features that now you can show that allows us to show that lower number that we couldn't show before. So that is effective officially on Monday, June 12th. And then we also have a max monthly LTC benefit at issue as well. So if you have a very affluent client that wants a very robust policy, they have to start out at $20,833. They can't start any higher than that. They can grow that benefit over time, but that's the maximum amount that they can start with. So hopefully you guys all have clients that can start at that amount and work with Christian and I there. So this just summarizes, once again, the premium payment options. We can do a single premium as well. We can pay for 5 years, 10 years, 20 years, and now pay to 100. That's out there too, the older insured's age of 100. I think this final line here is going to be a really differentiator for us in this market. So prior to this, CareMatters 2, the client had to complete their premium payment structure when they're paying premium. So if they go and claim in year 8, they would have to finish that 10 pay, right? Well, now we've built this product in such a way that once one individual goes on long-term care claim, the premium is waived while the LTC benefits are being claimed. So as long as one person is on LTC benefits and they're receiving those, Nationwide is waiving the premium requirements, which is huge. This is something you guys are going to differentiate yourselves with when presenting this to clients. Now, I want to be very clear, right? If a client comes off of LTC claim or the first client passes away, then the premium does need to continue to be paid, but you are not required to back pay any missing premiums. So if a client goes on claim for 2 years and then they pass away, basically they saved 2 years worth of premium payments. So that is very, very crucial. That's not something we have on the individual version of the product. This is new for us, and it should be a huge differentiator for you guys in the marketplace and allow you to speak very, very confidently to your folks about this type of a solution for them when you're positioning this. We also, Christian did a good job touching on inflation, right? So we did tweak our inflation options a little bit for this CareMatters Together option. So wanted to be very clear that we have now removed this 3% simple. We've also removed the USMCI that he detailed, and we've just removed those and we've just stuck with compound options here. So we have 3% compound for 20 years. We got a lot of feedback that for younger clients, 3% forever was just very, very expensive, right? So we kind of wanted to hedge our bets there. So we have a 3% compound for 20 years and then stopping or leveling off. That's an option. Or you can still continue the traditional route and go 3% for life or 5% for life as well. So for once, when we say inflation, it's a good thing. We're going to grow your client's benefit over time, and you have that solution that's available to you. Christian had talked about the tax advantages. Those are still going to exist in this marketplace, and now you potentially have the opportunity to do it for both individuals. So if you have a husband and a wife situation and they have that HSA and they want to do that reimbursement from that tax-free up to age-based limits, they could potentially do so on both folks. Or if you have business owners that you want to work with and position this with, work with Christian and myself. We can devise a plan for you that can get the best bang for your buck there for your business owner clients that you're working with, because this is one of the solutions out there, the only solution that Nationwide has out there that you can position this for tax advantages for your business owners. Finally, the elimination period, Christian had mentioned it, 90 days, right? For the first 90 calendar days, not service days, but 90 calendar days, Saturdays and Sundays count. No benefits are paid, but on day 91, we're going to back pay you for those 3 months plus month 4. So in this example on the screen here, the client has a policy paying $10,000 a month. On day 91, we're going to send your clients a check for $40,000. Huge, huge, huge differentiator in the market. This is going to put us ahead of a lot of our competition out there. Even if they're showing a little bit higher monthly LTC benefit, this retroactive payment puts us significantly ahead if we're paying $40,000 and they're paying $11,000. Right? We're always going to be ahead of them from that number. So really great feature there that's available. This isn't even on our LTC rider that you'll hear about next week. This is only available for CareMatters 2 and CareMatters Together. What's also great about this is this can happen twice, right? So because it's a joint policy, the first person goes on claim, they fulfill their 90 days, boom, day 91, 4 months of benefit. Second person goes on claim, fulfill their 90 days, boom, day 91, 4 months of benefit. So in this example here, your clients are going to get 2 lump sums of $40,000 in this example. So just keep that in mind. One thing to point out as well, both folks will have to satisfy their own elimination period. So you don't have the opportunity to satisfy it once per the policy, but both individuals will have to satisfy the 90 days. And then once it's met forever for the lifetime of the contract there. International benefits are going to function the same way. We're only going to pay out on the first pool of money that's available, the death benefit portion. We do not pay out on the extension of benefits, or we call that our second bucket. But if you come back inside the United States, that availability does resume and we can start paying out there. So if you have international clients, work through that with us. We'll be able to explain more in detail. We won't cover that too much today, but we'll go from there. So that was the extent of the CareMatters Together policy. I did want to just recognize really quick, we had some technical difficulties here with Luke, and he was going to show us some features and some resources out there. And then we're good on time here, and we'll have the last 5 to 10 minutes, turn it back over to Courtney and Mike. But sometimes long-term care can be very overwhelming, right? So you can say, hey, I don't know where to start. I don't know how to approach my clients. I don't know how much LTC they need. So there's 2 resources today that we want to show you that are available to you that are completely free of charge. So first off is the Healthcare Cost Assessment Fact Finder. This is just a 1-page document here you can put in front of your clients to answer a few questions based on their health, their income, their retirement, etc. And then you send it back to Nationwide for free, and Nationwide generates a report that you can then sit in front of your client here. And it's a 9-page report. It's very visually appealing. And now you can sit this in front of your client with graphs and charts and say, hey, this is how much long-term care we're projecting you need in the future here. So that's what you're seeing on the screen now, is this is a hypothetical example, in this case, of Jim Smith and Linda Smith, who live in Ohio, where we are located in Columbus, Ohio here, and what they're projecting to need at long-term care, what age they need it on, and how much it's going to cost them. So now you can put a plan in place. So what you see on the screen there is Jim. So now Jim is projected to need long-term care at age 77 in the year 2039. So we have 16 years to build Jim a policy based upon where he wants to receive care, how much he needs. So if a client wants to receive care in a home health care claim, the average cost at claim is going to be roughly $54,000 in Ohio 16 years from now. It's about $5,000 a month. Well, now you know, hey, I need to target $5,000 a month at roughly age 75. This just allows you to not necessarily pull those numbers from thin air. You can visually show them in a very concise way. This is how I arrived at that number. This is why I'm presenting it to you this way. And then the same thing for Linda, right? On average, women outlive the men. Same thing. She actually is going to need it 10 years later, and it's going to cost more. So we need to build her a policy that's available for her. It's about $20,000 more than what he's going to be when she accesses it at age 87. So that is available to you. We'll send all these resources that are available to you over today. It's free of charge. It takes about 2 business days to get this report back to you. Strongly recommend, if you're new to the LTC market or you want to just do one on yourself as a great starting point, this is available to you and we can help you. And if you're, let's just say if your clients are lazy and they don't want to fill out any questions, you can just go to our website. So once you become appointed with us, once you set up a username and password with us on our website, nationwidefinancial.com, we have a long-term care cost estimator where you can just drill down and kind of get an idea of how much it's going to cost. So we can just come out here and we'll just pick a state. We'll say Georgia. So I'll click on it. There's your state averages. Now you hit details. It breaks it down. I know it's hard to see there, but it breaks it down where you're located. So you can look at the state average, but then you can pick counties, right? So you could look at Valdosta, Savannah, Macon, wherever you want to be. And now you get a more customized approach. You can look at the cost today, right? So in 2023 dollars, today, informal care, roughly 35,000. But you say, hey, I know my client's 50 now. They are not going to need it for 20 years. Well, here, what's the cost going to be 20 years from now? And now, once again, you're just showing those clients to be able to illustrate, this is why I'm making this proposal to you, because these are the numbers that I'm seeing, and these are the resources that are available to you when partnering with Nationwide there. So those are available. That's on our website. The healthcare cost questionnaire will be sent out to you today. But ultimately, right, the takeaway today, guys, is starting Friday, the software will update. So this coming Friday, your illustration software will update. It will have the new price improvement numbers on there starting Friday. It will also have the CareMatters Together being able to run that on Friday. We'll start officially taking applications for CareMatters Together on Monday, June 12th. Not in 5 states. There are 5 states that don't have it: California, New York, Arizona, DC, and Montana. But all the other 45 states are going to be available for you guys to submit to us directly starting Monday, June 12th. And we could not be more excited to partner with this group. We are here to help you. Hopefully you're excited about the partnership. We know we are, and we're very, very excited about that. So once again, just would like to thank Courtney, would like to thank Mike for having us on today. Our long-term care, or excuse me, our life wholesalers are going to be back next week talking about our life products, but anything long-term care related, anything CareMatters related, reach out to Christian or myself or Luke or myself. We'll get all of your contact over to you guys. But thanks for having us on today. With that, Courtney, I think I'll turn it back to you. And then if anybody has anything else, we'll be free to go there.
Okay. Well, as we mentioned at the beginning, we told you to stay tuned for a special bonus offer so we can kick this thing off in a hurry and get it going. This is what we put together. First 25 agents that get contracted with AIM in June with Nationwide are going to get a $25 gift card. The first agent that submits and issues a CareMatters 1 or CareMatters 2 or CareMatters Together application will get a $500 gift card. And that application has to be submitted and issued within the first 90 days. So a couple things that we wanted to get out there right away to add some impetus to this opportunity for folks. Long-term care is a small business, not a small business, but it's a small community out there. And as a case in point, for those of you that have been on my webinars before, you're very familiar with Bob and Carol Davis. They're my perpetual clients. They're my examples for everything. And it's worth noting that Jim Smith in Ohio, his wife, Diana, is Carol Davis's sister. So everybody's related. They're all back together. So because we're kind of tight on time here, we're going to deal with questions when we do the follow-up calls here later today. The marketing team will reach out to everybody. One of the key pieces that we are very, very, very strident on is compliance, okay? And compliance, being compliant means that you have to be fully contracted with the carrier, have all the boxes checked. Number one, to qualify for any of these bonus offers, but number two, for us to be working with you on illustrations and things like this, okay? The actual fine print in your agent agreement says that you have to be appropriately appointed with the carrier to be able to move forward with that. So we'll be making that opportunity available to everybody on the call during the course of today's follow-ups so that you can get going with that right away, and make sure that you include all of the appropriate stuff as far as licenses and E&O and things like that you got to have. Get that back to us right away. We'll get everything going with that. So as we wrap it up, again, calling attention to what Courtney talked about before, we've got the long-term, or the life side team, the other Fab 5, will be with us next week, Wednesday, the 14th at 9 a.m. for part 2 of our Nationwide series. We're really excited to have them with us to be able to walk you through those pieces as well. I want to extend thanks to Nationwide's Fab 5 for joining us here today. We know that these gentlemen are busy. We appreciate them making the time available to help us out and to kind of walk everybody through this process. And with that, I'm going to go ahead and give you 5 minutes back We'll wrap this thing up. Courtney will process, and we will upload it to our website as we normally do, so that you can come back to it and review from an archival perspective. So thanks, everybody. Gentlemen from Nationwide, thank you very much. Tony, Jeff, your crew, we appreciate you guys pulling everybody together and put this presentation in place for us. And we'll go ahead and sign off with that. Thanks, folks. We'll talk to you soon.